Afternoon and welcome to Speak CFO, how it is that you particularly can build a safety business case that gets funded. So in case we haven't met, my name is Holly Foxworth. I am a registered nurse and I'm the Vice President of Marketing and Communications here at Axiom. And I have the pleasure of being your host today. I'm extremely excited about the topic that we're bringing up today. This is a first for Axiom, but we've heard from you guys. We've heard your frustrations about how you're trying to get equipment approved, or you're trying to get a new hire, or maybe you're trying to bring on new programs, and you're constantly running into that no, especially when it comes to the finance side. So what we want to do is make for sure that we can kind of give you the language so that you understand how it is that we can take you from that no to get you to the yes. And so we actually brought on our CFO directly. His name is Kevin Campbell. And we said he was the big bad wolf. He's not the big bad wolf, but his job is to say no. We say that that's his primary job, is to say no. But he's going to give you an inside look then on what it is that gets his attention, what he wants you to do, what it is that you can show, how it is that you can ask for these things that you're needing in particular, especially going into budget season. So several quick things before we get started. As always, these events are really conversational. I see some of you that are already speaking in the chat, and that's great. I love seeing everyone in from the different locations. So continue to do so. I love to send gifts after these events, and I send those to those that participate the most. So if you'd like to receive gifts, make sure that you are participating there. Add your questions in. We're going to ask you some questions, but you can share stories, tips, tricks, anything that you want to add there. Next, on the upper right-hand side of your screen, that is your RSVP for next month's event. And so that one is, it has a behavioral health component in it. And so it's how it is that you can slash your claim duration by focusing on behavioral health and how that can bring your employees back to work safer and faster. So Sarah Hathaway will be participating with us on that one. She's fantastic as well. As you guys know, there's a big component of behavioral health when it comes to recovery. So we want to make for sure that we pay attention to that. We do have the slides that are located there at the bottom of your screen, along with some case studies. And then lastly, today does qualify for SHRM continuing education credits. So if you would like to participate in that and be able to receive your credits, what you have to do to qualify is just make for sure that you remain with us for the remainder of the hour, complete your survey, and then we will have you download your certificate there immediately. So before I bring in our specific panel and let you meet all of them, there's one question that I wanted you guys to start thinking about, and I want you to drop it in the chat. I want you to tell me what it is. Think of one thing that you have asked for in the last 12 to 24 months that you've been told no to. So we want to know all these different cases so that we can give you exactly the right recommendations here. And so we'll move on to introductions. Dr. Cherry, let's start with you, and then we'll move on to Kevin, and then and finish with Dara, if that works for you.
Sure. Well, thank you, Holly. My name is Scott Cherry. I'm Axiom Medical's Chief Medical Officer. I've been with Axiom for 8 years now, and my professional background is I'm board certified in preventive medicine, public health, and occupational environmental medicine, and it's a pleasure to be with you today.
Fantastic. And the man of the hour, Mr. Campbell.
Thank you, Holly. I'm Kevin Campbell. I'm the CFO here at Axiom. I've been with the company for 2 years. I have sort of 15 plus years, I would say, of sort of senior finance, corporate finance experience. So hopefully we'll get into how the finance world at least sort of thinks and looks at things that will be helpful for the group today.
Absolutely. Thank you for joining us. And Ms. Dara Wheeler.
Hi, everybody. My name is Dara Wheeler. I'm Axiom's Chief Marketing Officer. This is my 20th year with the business. I love what I do. I love supporting our clients. And I love partnering with CFOs. And Kevin is the best we've had. And so I'm really glad he's here joining us. Building those relationships across functions is one of the best things you can do. And I think Kevin will give you all lots of great insights into how we can do that better as organizations and build these programs as a team.
Absolutely. Well, thank you all three for joining us today. We appreciate it. So I was looking at the chat while you guys were going through some of those things, and it looked like that there were some that were asking for additional people. It looks like that someone was asking for an Axiom membership that I saw that came through. Let's see, was there some equipment maybe that was on there, software, things along those lines? So yeah, exactly. That's exactly the types of things that we want to go through today. So whoever, tell us who's ever been told no, who's ever seen that request where you're wanting something, you're told either no, there's no budget for it, which you kind of feel like you get that vague brush off. Maybe you get the not this year where you still feel like, well, maybe we need to postpone it a little bit. You might have the come back next quarter. That's what I consider so you're saying there's a chance, maybe section, or the not the priority. And that one's always usually the gut punch there. So tell us who of you, who has been told no to some of those things, or what have you specifically been told no to? And Kevin, while they're doing that, I was going to ask you, have you given out any of these particular answers whenever the requests have came in?
Yes. Can I plead the fifth on that, Holly? Yeah. No, I mean, the answer is, of course, yes, right? Yes, I have said no. But honestly, you don't want to say no. What I would say is hopefully today through this conversation is we can help get you the yes, right? And I've definitely been part of, in my career, last 15 years, as I mentioned, sort of in senior finance positions, been part of a lot of conversations, not just around budget time, but in general about capital allocation and investments that, companies have wanted to make. And so, you see over that period, I've seen a lot of business cases that have come forward that, where ultimately the answer was no. But again, we want it to be yes. We want to get to yes. And so hopefully today with some of the conversation, we can help more of those get to the yes. Sometimes the answer is going to be no, right? There is limited capital. Companies have limited capital that they can make choices with and investments in. But hopefully, again, with following today's conversation, we'll be in a better spot to maybe make a more coercive or forceful argument for our team.
Absolutely. I saw another one, and Carl had put in there a piece of equipment that had an ROI. The ROI is 1.5 years. What's your thoughts on that, Kevin? Do you usually ask for an ROI?
100%, yes.
100%.
Sort of the payback period there. I mean, if you have a payback period of 1.5 years, that's pretty fast, to be honest with you. So, I think if you've got a good argument there and the numbers are sound and legitimate, I think you'll get a lot of interest in something that has a payback that's quick.
Fantastic. Well, Carl, that sounds like it's good news for you. So good job there. Darryl, I'll come to you next, and then maybe, Kevin, you can add in too, but talk to us about why safety programs appear to get cut sometimes. When you start seeing that when there's cuts that are being made to the budget, why is safety sometimes the first to go?
Yeah, I think there's some...
Oh, sorry.
Oh,
Kevin, you go.
Yeah, I was just going to say, I think... I'll go.
Okay.
Sorry. So I would say, in general, safety is often viewed, I think, as a cost center, frankly, rather than a driver of value for an organization, and particularly well-run safety programs, because, oftentimes if it is a well-run safety program, you're not having a lot of visible, issues, claims that are coming up, challenges, and so that lower activity keeps you off of the radar screen, but that also just means you're less visible. And so I think as an executive team is looking at, hey, for whatever reason, we need to either make cuts or look at our funding for next year. Sometimes that can actually be certainly a negative for safety. And I would also say a lot of safety investments, particularly for fully insured programs, they take a long time to show up and impact the numbers financially. So, you might have an investment like the equipment investment that was mentioned earlier that has a turnaround of 1.5 years of a sort of turnaround time, whereas, for fully insured programs, it might take 2 to 3 years before you see the full impact of that. And so I think that creates some challenges as well. And then the last point I'd probably make is that you also can have challenges with, leadership turnover, right? So if the executive team, if you implemented a program 2 years ago, well, today, 1 or 2 of those executives who implemented that are gone, and 2 years from now, 2 more are gone. You lose sort of that institutional knowledge or memory about why you made the investment in the first place and what the impact that investment has had over the last, couple of years.
That makes so much sense. Absolutely. Dara, have you seen the same things, especially working closely with some of our account managers and things like that?
Yeah, I want to point to a couple of things Kevin said. He was talking about long-term investments having to play out over time. And one of the things that in what he was saying is, claims cost. And when you think about the silos between sometimes safety, risk, and claims, depending upon how you insure your business from a work-related injury perspective, sometimes the costs and the benefits sit in different teams and different departments. And I think one of the things that finance can bring to the table is some better oversight over where those silos are and make sure that there's some oversight into the cost benefit. And I know we'll probably go through that in more depth, but we see that quite a bit when you think about a safety program trying to prevent the injuries from occurring. And then when they do occur, help minimize the impact of those injuries. Sometimes then the savings goes in much further downstream and safety might not always see the full ROI picture. And so making sure we bridge that gap and think about those competing priorities is really important. I think it's also very challenging for anybody in safety or risk to present an ROI for something that's a negative when you think about the things that you prevent versus the things that you can point to. So prevention, we know there's a huge ROI to prevention, but sometimes that's a hard conversation to have with finance teams because it is something that doesn't exist yet. And so when you start going into the theoretical business planning, sometimes that's challenging. I'm sure that most safety team members here in the webinar today have experienced components of that and making sure that you partner closely with various teams to see the full picture. And I do think that the job of the organization, we think about even though we know that there's these steps we can take, making sure that the entire picture is being presented fully.
Absolutely. Matt Kelly said it's usually 3 to 5 years downward history trends on the insurance side for the actuaries to actually lower. So agree hard, improve immediately the longevity of a good program. Great point. Thank you for pointing that out. Yeah. I see there's also several of you have said that you've asked for several second safety professionals. Kevin, do you have anything that you want to add there? Like, I know that we're going to get into specifically what you would include in some of these proposals, but when it comes to capital in terms of people, what matters to you the most?
I don't fully understand the question. What exactly are you asking? Sorry, Holly.
That's okay. What do you see? There was several that had asked that they were asking for secondary safeties to help them in their role. And so I was saying that I know
like new hires, you mean?
Yeah, new hires.
Yeah.
And so I think that we're going to get into specific use cases and some in the end, but just for their sake, is there one thing in particular that stands out for you or that is most important to you whenever you look at someone asking for a rehire, for a new hire?
That's a good question. Nothing sort of stands out in, per se, but I guess what I would argue or encourage the team to sort of look at is, obviously if you've got a new hire, what are the benefits you expect to see from that new hire, right? And then secondarily, like maybe compare your safety program and headcount to the extent you're able to get this information, but to other sort of industry peers in comparison. So you can say, hey, look, we've got and I'll make it up, I don't know what a good metric is, but, one safety professional per 100 employees, well, industry average is 1 per 50. And so, we need to add this person that will bring us in line with industry averages. And here's all the other benefits we'll get from that. I would probably look at it from sort of both of those perspectives.
Both angles. Yeah, that makes sense. There was the comment that I'd mentioned about that it came from Matt Kelly, and this may be in your wheelhouse, Kevin, but he had said it's usually 3 to 5 years of downward history trends on the insurance side for the actuaries to actually lower. So he agrees that to prove immediately that it's difficult to prove the longevity of a good program. Yeah. Anything you guys want to add to that?
Yeah,
I would just say that is. Go ahead, Dara.
Yeah, I was just going to say there's a couple of different key points here. We tend to see, if you start investing in early intervention, and I'll let Scott maybe jump in on that, that you can see a much faster return on that trend. And we have, I think, in our module, a couple of case studies where we've had clients see a return much faster. But the other point about people's roles, I think a lot of stats around executive and leadership roles is there is a big turnover and trend in terms of if somebody doesn't see results immediately, they might not have the opportunity to stick around 3 to 5 years to show that downward trend. And then they have to, the whole organization kind of has to restart that process again. And so allowing professionals that can provide this kind of fast but also long-term results is really critical in all of these functions.
That's such a good point. Yeah. Dr. Sherry, did you have anything you wanted to add from the immediate intervention?
What hit me really strongly is in corporate occupational medicine, there's health, safety, and wellness. And I think wellness has probably been the most challenging over my career over the last couple of decades, where there seems to be a huge lag in the value proposition realized at obviously the CFO level, but maybe even at the operational level. But something regarding injury case management is very, the return on investment is quite apparent, because you're having immediate returns on each injury by optimizing those outcomes, right? Maximizing, first aid rates, minimizing OSHA recordability, maximizing return to work and things like that. So I would just say to this audience, just be careful that whoever you're proposing this to, perhaps they may be confusing this with corporate wellness. And although there maybe are some side aspects to it to a degree, the injury case management has very quick return on investment at the individual injury level and across the whole population.
Mm-hmm. That makes a lot of sense, especially when you look at it in the long-term perspective. Kevin, what would you say when organizations underestimate the safety value? Where does that disconnect occur? Like, you had the chain that is taking place. So where does it feel like that there's drop-offs there?
Yeah, I think this gets back to one of the things Dara mentioned earlier, which is the siloed reporting, right? So I think that creates sort of a disconnect across the organization. Safety might be reporting on one metric, but then that has implications for HR or risk management or insurance. And then there's different, things that finance owns on the back end of some of those metrics. And so I think part of the challenge is connecting all of those dots and keeping that sort of a cohesive story so that, the executive team knows at the end, this change resulted in, this impact on the number of cases or the severity of cases. And that resulted in a change in our mod factor, which resulted in a change in this. And then here's the overall, financial impact. So I think having that long sort of chain of events is part of the challenge, to be frank. And I think sort of the siloed reporting of that, where people are just looking at it from their perspective as opposed to a more holistic view, creates that challenge. The time lag we mentioned is a big part of that. And then honestly, I think there's just some differences in language, right? So, how risk thinks about things or safety thinks about things, is will be different when than how finance is looking at it, right? So finance is going to look at what's the impact on cash flow, EBITDA, profitability. Will this allow us to generate more revenue versus these are the activities and they impacted our mod factor, and so it's sort of translating from one language, insurance / safety language, into finance. I think that can also create some of that disconnect, and so hopefully we can help bridge that gap.
Absolutely. Looks like a lot of you guys have also mentioned that you're dealing with the Michigan smoke that's coming from Canada. So our thoughts are with you guys, and I hope that you're all safe. You're checking on your people. We've had some floods that were here as well. So definitely a difficult time. Dr. Cherry, I'm actually going to come to you next. And so what I was going to ask was specifically from your perspective, and then we'll go to Kevin, what it is that shifts that helps you to win some of these budgets, how it is that you can reach the yes. What have you done to do that?
Reach the what, Holly?
Reach the yes. Reach the yes.
One more time, sorry.
The yes.
HES?
The approval, yeah.
Yes. So I think trying to provide data that really helps paint a picture, right? Like looking at injury rates, looking at benchmarking it to whatever industry you're in. If there's a benchmark, that's very helpful. Where your specific organization is at with respect to the benchmark. And then if there's trends, right? Are things getting worse? Are things getting better? Have things just plateaued? And I like looking at it from an epidemiological perspective as much as I can. So look at our top 3 biggest risks, so to speak, and you can contextualize it in many ways, like how many FTEs is this affecting? How many operational impacts is this, hitting, and things like that. But you have to put it in terms of how it affects the business.
Absolutely, I agree. Kevin, what would you say, what can safety leaders do to kind of combat some of these perceptions that are there?
Yeah, so I would say first, partner with your finance team, right? And it all depends, of course, on the size of your organization, whether that just means, hey, you just have a CFO, or underneath the CFO, there's, various directors or, financial analysts that you can work with. But I would say partnering with them early and on the front end of a proposed investment will help, right? So you'll know from the get-go, how are they going to think about this? What are the questions I need to answer? And so I would say, first of all, that is important. I would also say, look, partner with the other groups in the organization that may be impacted by this. So, work with HR or risk or insurance or legal, or so that it's, you've sort of got a collaborative, plan sort of going into it. I think that will help buy more support as you go to present that opportunity, right? And so if you've got more buy-in on the front end from various groups, it's going to make that sort of sale process or pitch to the executive team a little bit easier when they know their various departments, are on board, essentially. I agree with Scott, right? Present your information with evidence, with data, with metrics, comparison points, if you're able to get that. One thing I will say not to do, like I've had, particularly on the safety side, investments presented this way that I didn't like how it was presented, was sort of leading with the liability. Like, hey, if we don't do this, there's huge risk, X, Y, or Z could happen. Like that, at least from my perspective, just immediately put up sort of defensive walls of, wait a second, what's going on here? What, why, I don't like that emotional impact. I want to make a decision based on the data, the numbers, and not, I don't want to say fear, but I'll say fear, in this instance, right? So I would say try not to do that, because I think that automatically puts people on sort of the defensive, right? So
it almost feels like an ultimatum. It almost feels probably like a little bit of a like threat. Like if we don't do this, you're gonna regret it kind of language. And it's interesting because the little bit of insight I'll provide too is that yes, present data and metrics, but if you don't already have a good relationship with the team, it doesn't really matter. And so even though finance people are metrics driven, if you don't have the human element first as you build that kind of cadence and relationship and know what matters to them, then it's going to be, it doesn't really matter what metrics you present or what sort of case or business case that you present, because what you need to do is have some understanding of what finance and accounting really need from a business case. And if you don't have that understanding or relationship first, it really becomes difficult to get approvals, because and I loved what Kevin said about speaking the same language. If you're not speaking the same language, and if you think about finance and metrics and accounting, it really is a meeting of language, making sure that you've got a relationship, you're speaking what they need, and that you understand how to say it, not just here's numbers, yay, congrats, like approve my numbers, number. So it's a balance between presenting the story behind the numbers, because you need to have the storytelling components. Otherwise, the numbers could just be vaporware, right? It just doesn't really matter.
You're exactly right. Yeah, there was a question that came in from Josie, and Daryl, I'll come to you, kind of relying on your HR background a little bit, and then I also would love to hear your take, Kevin. But Josie had mentioned that they are growing. Their company is growing, nearly 100 employees in this branch of the business, but went from 3 to 7 locations. So they're rapidly expanding. And so they had asked about, you had mentioned 1 to 50, but they were asking about multiple locations. So what is your strategy from an expansion perspective in terms of how you would approach that for needing additional people?
I think Kevin mentioned the benchmarking approach and finding industry benchmarks. So there are definitely safety benchmarks, but there probably are more likely to be industry benchmarks depending upon how robust and safety sensitive your roles are. So if your industry, Josie, is in a very highly safety sensitive industry where you have more potential and risk for injuries, there might be a higher ratio of safety to employee counts that you want to look into. If you are an Axiom client, we could definitely give you some of our benchmarking data and materials, but that's going to be very industry and location specific. I know that if you grow some of these locations and some of those locations have more employees or more employees in safety sensitive roles, that might be a different answer than a bunch of office-based employees. Office-based employees get hurt too, and I don't want to discount that. There's lots of trips and falls on carpet and all sorts of other paper cuts, but if you've got a bunch of employees that are in safety sensitive roles, then you want to potentially have a different level of ratio of safety professional to employee counts.
Yeah. Anything you want to add there, Kevin?
No, honestly, I think Derek covered it well.
Yeah.
I do think if any of you have worked in HR, it's actually kind of a similar calculation with back office support where you're looking at industry benchmarks for how, people often don't realize that we have to be very careful with HR leaders too, because there's only so many people that a person in HR can support. And if you don't have some industry benchmarks to compare against, it gets very difficult. That's a back office support function that might not be as clearly it's not a revenue generating function. It's not a margin generating function. And so when you're looking at staffing for things like back office, what you end up having to look more into is some of those industry benchmarks. They really are important to track and understand. And so depending upon your industry and your roles, that is a really great mechanism for figuring out the right staffing ratio for safety professionals.
So true. There was an additional one that was talking about one of the points that Scott had brought up, and just said that Scott said that there is effective language in pitching safety to finance outside of just data points. And they were asking what are most useful for building an argument from a business perspective, like what Dara had mentioned. And you're actually in luck, because we were going to bring up that topic next. So I'll come to you next with Kevin directly. So what are some of the green flags that you would maybe call whenever it comes to a budget request? What are some of those terms?
Yeah, it's funny. I know the question is really more about what's outside of numbers, but that's like the first thing I look at. I look at the numbers, and I look at the total cost of, so if I'm looking at a budget in particular, I look at it at a line item level, and I look at, what are the changes versus our current spend, and, what's driving those changes, and up or down, and whether or not, wanting to make sure that, let's say it's an investment we're making in safety, so the safety expense is going up, but we expect to see benefits in lower, insurance claims. I'll want to then make sure, hey, are we including the investment, so the cost of this, but are we also including in the budget the benefit as well? And so, I always look at the numbers, right? I do look at that, and this probably gets into sort of the next section a little bit too, sort of the key numbers. That's what I'm looking at, right? I want to know, what are the total dollars? What are they going up? Why are they going up? Okay, we're making these investments. That's what's driving it. What are the benefits of those investments? And so, but that's where I always start, is just looking at those, the total dollar amounts. And it's not just a safety thing either, by the way. That's how I look at it, the budget in general, across all of our departments.
All of the departments. All right. Holly had weighed in and mentioned some key factors that she sees for benchmarking, and it included workforce dispersion, regulatory burden, high versus low risk injuries, and overall culture. Culture is one that we haven't really spoken about much. Dr. Cherry, anything that you want to add from a culture perspective there?
Certainly, I think there's two scenarios every organization and every safety or HR or risk manager in our audience might think about is, companies have to stay in business, right? So that's kind of like the bare minimum, right? Like the company has to have, positive cash flow, be profitable. And so when you look at injury management or health and wellness, those come secondarily to a company being, fiscally responsible and moving forward in their own business. So I would say that's necessary, but not sufficient. The company's values have to also then, once they're a hardy business moving forward, they need to then make sure that their employees are well taken care of, right? And so the company has to have the money to be able to pay for a program, and then the company has to have values through the leadership and culture that they're willing to invest, right? And so obviously there's harder outcomes and softer outcomes. And so, from my perspective over the years, I think, again, the incident case management's a much easier outcome to track, because you are seeing those dramatically impactful outcomes, whereas wellness is a longer and maybe a softer outcome, so to speak. But I think it's based on the culture. Once the company hits a certain business maturity, I don't know if that speaks to you, Kevin, or if you can put it in your terminology, where they're making profits and then they're a solid company, so to speak, right? So
yeah, honestly, I think the cultural thing comes from the top, and it's the executives and how they value and care about safety and the value of their employees and potentially customers, and whoever may be impacted. And I've been in organizations that have, I don't want to say didn't value that, but had things happen that caused them to reassess and have to, make that and move that to sort of the top of the their priorities. And so, but it does, I think you need to have an executive team at the top that has that as a priority to help, drive that across the organization.
Great. All right. Well, you're all three on the hot seat here because Matt has asked, he said, I'd love to hear the panel. So that includes all three of you now, the panel's opinion on managers having the knowledge or foresight or knowing the average cost of an injury. So like sprains and strains and how that affects the company's net profit. He had mentioned some of the EBITDA percentage, direct costs, things like that. So you're looking at total cost of injury. And he was just saying that it was a pretty staggering number and that cost that it comes up to really can be significant, and was agreeing 100% with Scott. So what are your thoughts in terms of from a management perspective?
I can start.
Yeah.
In some ways, I think that's a big ask for a non-medical person or someone, because you're having to manage. You're not in health and safety per se if you're a manager of people, and so that can give unintended consequences, right? Like if you're saying, "Oh, here comes this ankle sprain or this back sprain," that's $2,500 over so many people. So I would say do a stoic approach, focus on the process, not the outcome. Like you want to have the best protocols in place for safety, for process, for preparedness, right? And if there is an injury, have the best process to handle the injury. Maybe have some kind of understanding of it, but I think if you have that cost in the back of your mind, it might provide unintended consequences for certain levels of management. You almost need a team approach for this, almost like at some kind of leadership committee meeting or something like that.
Yeah, that makes sense.
I think that's where it gets back to sort of the conversation about partnering with finance, right? And so, we don't expect, all of the safety individuals to know all the financials and all the numbers. That's what we do. But if we work together, right, we can help provide that information to you so that you can then use that in whatever business case or however you want to use that data. So I think if you have that relationship with, someone in the finance team that can help you understand all of that, that will make your life certainly a lot easier.
Absolutely.
I'll also say we have benchmarking data that we can talk about, average cost of injuries and things like that. So that's certainly something that, can be used as a benchmark as well.
Yeah.
Yeah, it goes back to tying that story together and making sure that you've got partners that are helping you tie that story together. There are a lot of components of the cost of injury, and there are really great benchmarking data points out there. Industry and then Axiom has great benchmark data we can share. We also can look at this by industry and making sure that, Holly B, you keep bringing up company culture. That's my favorite, and it's the one that gets probably talked about the least. But we can actually define via metrics how impactful a positive safety culture is on the business. And it seems counterintuitive, but the more that employees feel supported in reporting injuries, the more safe the company is. And we've seen that time and time again in our data. And it's another one of those things that historically we always talked about good injury care programs having an impact on culture, but it was harder to always tie those metrics together. I think we're becoming much more sophisticated as we think about psychological safety and culture and all of the impact that these programs have on overall safety and then in return the dollars associated with those injuries. So all of those data points are great. You just have to be able to tell the story, and that's why partnering with finance is helpful to help tell the story well.
Absolutely. Thank you for that. Kevin, I'll come to you next. And I know that some of these terms may be not as familiar with some of our audience, so you may go through them a little bit more in detail. But if you had to point to one number that was going to prove safety protects your margin, what would you say that it would be?
Yeah, and I say for me, and again, this might be different for your finance team or leaders, so you'll certainly want to understand that as well. But for me, it gets back to that sort of total cost, the total cost of risk, I guess, in this instance, that, I want to understand what that looks like. And, that includes, the cost of your premiums, claims administration, legal costs, et cetera. And so I want to look at all of that sort of, bundled together. Those are impacted by a variety of other things, right? So those are impacted by your mod factor or number of injuries, et cetera. But for me, the one thing that I'm looking at again is that sort of total cost from a dollar perspective. These total cost of risk, equals whatever, $1 million, $2 million, and so that's what I'm paying most attention to.
Makes sense. Josh Brody had mentioned when pitching safety items that require budget, two perspectives or different directions are needed, and had mentioned finance to concentrate on the money for the C-suite, but then also brought in the perspective about operations and the production levels. And I think that that's a really good point that we haven't addressed yet, is that we've looked at it we've talked about from the finance perspective, but we haven't talked about it from an operations perspective of those that are on the ground and actually doing the work. Anything that you would have to add there, Derek, from the operations perspective and how that ties in?
Yeah, that's a great comment. As a reminder, organizations handle where safety sits in the organization very differently. And so some organizations have safety in the operations path of the reporting structure. Some organizations have safety under risk or in other departments. And that makes a big difference to how you look at tying that story together. It's one of the things we ask a lot when we partner with clients. Just to comment back really quick on what Holly said too, if EHS becomes a pillar in the organization's values, they do treat safety as a different, very different focus. And we also look at publicly traded organizations or organizations that do reporting publicly. If they have to report safety as a part of the compliance package, they treat safety very differently. Also, companies out there that I think a few of you are in oil and gas and other company types that have to also earn contracts, and you have to have specific safety records in order to earn contracts. So that's a very different environment and how safety is valued, which is why Axiom's typically partnered with companies that see safety as an important component of overall value in that value chain. But making sure that you know where safety sits within an organization is an important component of this, because the way you then view safety within the organization shifts. In the operations world, when you have safety teams that come up through operations or report into a COO, that becomes a very different conversation in terms of metrics, because then it's more about operational efficiency and metrics when you look at making sure that employees are staffed appropriately. And then it becomes a little bit almost more like an HR metric when you think about replacement costs or costs of employees not being able to perform their job duties or having to replace or manage that fill-in of somebody that's injured or not performing their job duties. And we've seen that shift very interestingly, especially in that oil and gas industry over the years, when you have downturns in oil and gas and you start having employees replaced with more tenured employees. Looking at some of those components, we look at things like tenure and age of employees in different roles. And those types of metrics become very different when you look at operations versus risk and legal and some of the other departments. And so knowing how your organization organizes various functions becomes a critical success factor as well.
Absolutely. Yeah.
Holly, can I add one thing? I think
Yeah,
I really like what Josh said, and I'd actually take it a step further too, right? He's mentioned two different perspectives, but there's more, right? So there's legal, there's the impact that these investments will have from a legal perspective and reduction in lawsuits, for instance, or there's HR and claims administration. So it goes above and beyond just what I'm looking at from a finance perspective, and here are the dollars and the impact that has. It does touch ops, it does touch legal, it does touch HR, and so that's part of the reason why you got to have all of those entities. Sort of, you're collaborating with them all along the way to be able to say, hey, we think this investment will impact all of these different areas and metrics, and here's how. So yeah.
Well, let's get into the good steps, because I know this is exactly why you guys came. So, so let's actually talk about how it is that you can build some of these business cases. What it is that you're going to be providing, what you're going to be showing, things like that. Kevin, if you were building from scratch, who should be involved, and what should it contain?
Yeah, it would be those groups we just mentioned, right? So obviously finance, HR. And I'm talking specifically here about obviously a safety investment, but finance, HR, potentially legal, risk or insurance, or depending on who and how that's managed. You should also try and get data from your brokers from an insurance perspective, or any industry benchmark comparisons, right? So you should have that. You'll sort of the sorts of things you'll want to include will obviously be the cost of the program. What are the upfront costs? What are the ongoing costs? What are the risks that you're trying to address? Where do we stand on those metrics today? How is this investment going to change it? What's the return we expect to receive, both financially and maybe in some of those other metrics we talked about? As Dara mentioned, it's not necessarily just cost savings, right? It could be, hey, we can actually, because we're able to lower our TRIR to a certain level, we can now compete for additional business, right? So there could be, revenue impacts as well. So think about it from that perspective. And then also you'll want to show the timeline, right? How long is it going to take? We expect to make this investment in June. We'll see the benefits starting to show up in our numbers in X period. Here's how it will flow through, financially over the course of the next 12 months, 24 months, 36 months, et cetera. And so, those are the sorts of things or ways that you'll want to make sure you include that data in how it's presented.
Absolutely. So speaking of, Brody, you had mentioned cost avoidance, and that was actually what we were going to discuss next. So what would you say then, Kevin? What would you say undermines the credibility in a budget discussion? Whenever someone comes to you and you're going to have a budget discussion, what destroys that credibility?
That's a tough one. I'm not gonna lie. Like if you come and say, well, I'm going to spend $1 million and it's going to avoid us from spending $2 million that we're not spending today, but I think we'll have to spend. It's just going to be met with a lot of skepticism. So I think what you'll need to include with that is very specific reasons. What you're avoiding, how you're avoiding it, et cetera, because it's one thing to say, I'm going to buy this piece of equipment. It's going to allow us to eliminate these costs because of X, Y, or Z. That's just a little bit more tangible versus saying, we're going to implement this new safety program, and I think we can avoid $2 million of costs we otherwise would have had to include it. So it will be challenging. Now, it all depends on the investment too, though. Like if you have some investment where you can say, hey, our business, if we look back at some of the companies that were talking about growth in their businesses, for instance, going from 100 people to 500 people, if you're able to show, hey, at 100 today, we're spending X amount of dollars in safety, and with this investment, by the time we get to 500, we won't grow, that costs 5 times because we'll get the benefits of this investment. That feels a little bit more real and more tangible to me versus, something that's just a little bit more generic. So, but again, it all depends on that specific investment. So.
True story. A lot of questions. I'm sure that safety professionals are thinking, coming into these decisions and when they're trying to come up with their budgets, they may not feel like that they have all the data that they need. So what should leaders do if they feel like that they don't have all the different data that they need, or it's not clean data that you would be looking for?
Yeah, that's going to often be the case. And I would just say, that's okay. Start with what you have. Don't wait. Start gathering the data. You can maybe segment, if let's say there's multiple data sources that are driving an investment, maybe you can segment between, hey, this is data we have really high confidence in versus, this is the other data set that's, again, we're just less confident in. I would say use ranges so you can say, hey, we think based on this, the range of potential savings might be $500,000 to $1 million, or something like that. I would also say be upfront about the imperfections, right? If you come in and speak with certainty that these are the numbers, but that there's a little uncertainty around those numbers, that will be found out pretty quick. And so just be upfront about it. And basically commit to continuously improving how you're tracking, how you're reporting on that information. And say, look, yeah, today it's imperfect. We're gonna do X, Y, or Z so that over the next 6 months, we will have a better data set to compare against.
Great. Let's see. I think that the next one was why it was that some of these are getting rejected. We've gone over some of the pieces that are here, but I don't think that we've gone over all of them. Kevin, what would you say was the most important out of all of these?
Yeah, I don't know that in terms of why a plan isn't approved. I don't know that there's one thing that's sort of more important over another. I mean, it all depends, of course, on the individual case, but it could be how the case is framed. It could be sort of lack of data. Could be, hey, there's just competing priorities. We've got a better investment that we want to make in HR, for instance, or on the ops team, and we have limited capital, so that's why we're not choosing to move forward with this investment. It could be sort of lack of that support collaboration across the organization, so you don't really have that executive support when you go into the meeting to present. So those are probably some relatively common reasons why it might be rejected. And I would just say, like, even if it is rejected, that's okay, right? So I was part of in a prior life, worked on a capital allocation committee for a different company, and we every week we met and talked about various investment proposals that the various teams were sort of bringing forward, and 9 times out of 10 we said no. But here's what we need: we need additional information on the real impact that this is going to have. So if they came to us and the data was a little squishy, we would say, no, you need to go back and firm up this data and come back to us once you've done that. Here are ways you can maybe do that depending on the data, right? And so, a no now doesn't mean a no for forever. So take it when you do get that no and are told, yeah, sorry, no, that's okay. Take it in stride, sort of understand the reasons why, and work to improve that case. So,
Dara, have you ever been told no on a budget?
I don't know what you're talking about. In 20 years, I've never been told no. Maybe I just don't ask enough. No, I'm just kidding. Don't kill me, Kevin. So the only thing I was going to say here also is, if you have a vendor, you should be driving a lot of the data through your vendor partnership. And so if you have an injury case management vendor, make sure you're driving a lot of the data points through their data. I know we partner a lot with our clients on that. I think Kevin brought up your insurance broker and providers. Make sure you're really pushing them for data. Often they will play this game of, oh, we don't know, or it'll be hard to get, or this kind of waffling. You should have that data, you own that data, and you should be getting it on a regular basis. If you end up with internal silos protecting data, that's a bit of a red flag. And you should be at least helping partner with your team members to try to build these business cases. And if you've got people holding on to things because of various reasons, fear, reluctance to share, there are ways to navigate that and really try to break down those silos. That's very difficult depending upon the size of your organization and how entrenched some of these people are within the organization. But there are ways to start moving organizations into a better place if you can try to get access to some of that information, so that not to reduce anybody's job, not to call out that anybody's done anything wrong, but to move towards a better place of safety within the organization.
Good call out. There's one that I wanted to show you guys, and this one just spoke to me so much. And I can't wait for you, Kevin, to go through this. But it just kind of shows you the difference of what you may be thinking in terms of safety language versus what finance is thinking. So Kevin, what are your thoughts here? How is it that people can change their safety language over to that specific business language?
Yeah, I think this is a good one too. If you look at this sort of the underlying performance between the two sides, you're basically ending up in the same place, but the way it's explained or framed, I think it's just going to resonate a little bit more. The one on, the business language on the right will certainly resonate a little bit more, I think, from a finance perspective, right? And so the safety metrics obviously matter. I think the financial metrics on the right sort of connect the safety performance to the overall company-wide enterprise goals. And actually, it just sort of makes me think back to sort of the initial conversation we had about cost avoidance, or not cost avoidance, but why safety good programs get cut. They're viewed as a cost center as opposed to a creator of enterprise value, right? For the organization. And so in this manner, you can see you're showing that value and how that creates value for the organization. We're saving, $100K of overall sort of cost, or the $450K in the premium reduction, and that that is showing the value for the organization, as opposed to just saying, well, this metric is down a certain percent and our participation is up.
Absolutely. We're just kind of closing up here. And Scott, actually, I'll come to you on this one before I go to Kevin. But for somebody that was leaving today, what's one thing that you think that they should build into their cases to make stronger business cases? From maybe you want to talk about it from a health perspective, employee health perspective. What could they include from that angle that would help them get to the yes that they're looking for?
Let me think for a second. I think having just very good, accurate data about what's happening to your whole population is crucial. And you may not even need to assign a narrative to it. The actual good, comprehensive, accurate data may actually have a very compelling data without a narrative attached to it. So I think a lot of organizations, based on a lack of or a lot of institutions, they may not have a great metric on their injuries, right? And so they're siloed, and so they really don't know the whole picture. But like, if you actually could know your injury stats holistically, it really can provide a lot of insight to the executive team or to upper management. So I would say try to get the best data as possible, because that really can move the needle without even adding a lot of narrative,
Agreed. Yeah. Kevin, I'll come to you last and let you kind of close us up. But what are your thoughts on what would you recommend that they come prepared with? What's the most important to you?
Yeah, I think, start with understanding what the organization values, not just the finance organization, but the organization in general. Build those relationships across the organization. So, and don't do that just during the budget process, but do that across the whole year. focus not just on the activities that you might get from a potential investment, but the financial impact of those activities. Connect them from safety outcome to a business outcome. And then the last thing I would just say is don't take no for an answer, right? Keep coming back. A no right now doesn't mean a no for forever, as I said earlier. And if and when you do get that no, sort of take it in stride, understand why, and then work to continue to improve that case.
So I think you're saying that even if it's rejected, you're saying there's still a chance then.
There's still a chance.
There's still a chance. All right, good deal. Well, thank you all for joining us today. This was fantastic. I appreciate you joining us for such a specific topic, and I hope that you were able to take some of this that you can implement back in your organizations. If you haven't already, make sure that you get signed up for our next webinar, and we look forward to seeing you next month. And we'll leave this up so that you can go ahead and print, if you want to print out your certificates, you're welcome to do so. Thank you.
Thank you, Holly. Thanks, everybody.
Thank you.